Hi, welcome to the Market Alert for Tuesday, 13th of August 2019. So yesterday, geopolitical chaos slammed stocks as traders flood into safe havens. So let's see what happened. Yesterday we spoke about the implied indicating that we could see lower Dow prices, and that's precisely what we saw during the day. It started off okay, but then deteriorated and prices move lower, heading back. Starting with the daily charts, you can see there wasn't much selling around yesterday as far as tick volume is concerned, which indicates really there wasn't a lot of volatility. So we could see a bit of a bounce today. If not, then we're heading down to the 200 bar moving average. So yesterday, the market sideways in the pre-market session, and then sideways in the beginning of the session as well, as there was no economic news. Attempted to go lower here but managed to break to the upside. Then we've got the up thrust there, and then eventually the market starts to make its way to the downside, and then you'll see here we've got the market selling off sharply sort of late on in the session, and eventually being picked up by the plunge protection team and the shorts getting out as well, bringing support to the market, which can be seen here with this cluster of volume there. News today, what have we got? UK, we've got some average earnings index. This is going to show it's increased, according to the forecast. And then we've got CPI, core CPI from the US at 130. But again, it's really Trump's tweets that are dominating market activity at the moment. Meanwhile, the pound getting a bit of a bounce yesterday. You can see there, as we spoke of in yesterday's market alert, that you will get the odd dead cat bounce, and we saw this yesterday as prices moved higher, straight up to the 200 bar moving average area, couldn't hold, and has since come back, and it's become a resistance area for the pound, and still remains that way at the moment. Meanwhile, in Bitcoin, the market coming back yesterday, but a very choppy day, not a lot sideways, narrow, as you can see in the 4 hour there. We're going to a sideways move at the moment. The volume has also dropped off, which is clearly seen here. So it's a case of standing aside at the moment, and when you see this, you'll see why I'm advising it. We've got these horrible spiky bars are back, where we just get this sort of whipsaw effect there. So again, market managing to get back above the 200 bar moving average and hold, but has since broken back through with some selling there. But a bit sideways at the moment for this one. And other news, Deutsche Bank lower yesterday, this down in Monday's session, down at the 20 bar MA. And then in the implied volatilities, we spiked back up to 1874 for yesterday. You can see there with the market moving lower. So the option sellers are still seeing some downside here at the moment. We could go up to 30% on the implied volatility as well. Second wave is being measured from here, because if I can just scroll up a bit, this is the high that's been left behind, which corresponds to this price here. So 100% increase. If the market does move lower, then you would need to see at least 30% in the implied volatility to stop the next down move, which I wouldn't be at all surprised if it does happen, would be somewhere around this level. And that then may inspire the Federal Reserve to actually do something about decrease in rates. And in this chart, you can see we're still red and below the 20 bar moving average in the underlying prices, and above here as well. So you can just step back and have a look at the colours here to see exactly where we are. We're still on the short side of the Dow as being the best side at the moment. 10-year yield's been updated at last on the Fed site as well, and you can see that the last few days of volatility have really played havoc in the bond markets. Again, all of this just screaming recession around the corner. And the longer term, now you can see we're building up quite a chunk of inverted yield as well. You can see all of the other ones, how long it stays inverted for there. You can get a pretty good idea that we've got a bit more to go on this before we see anything where it starts to go back to the green side. But certainly interesting, great precursor to what is likely to be coming down the line. Okay, that will do it for this one. Everything up to speed. Not a lot of news out today, but I'm sure the market will find its own direction, and no doubt Trump will have a hand in doing this as well. And with that, as ever, thanks for watching. See you in the next one.